Today we are going to welcome everyone. Let's start a new unit today. Today we are going to start our new subject, which is title of the unit is finance management in a tourism and hospitality industry. So our discussion today will be about finance role in tourism and hospitality industry with respect of and why financial management is important in tourism and hospitality industry. So before going ahead, I'll show you the unit contents as well, which I'll explain you as well, and then we'll go through. Please study before accounting.
Yes, I did accounting in high school, and also I did accounting with my associate degree.
Brilliant. So you're aware of double entry bookkeeping then?
Yes.
Okay, good. So I'll explain you double entry bookkeeping.
Okay.
On Moodle, if you course strategy and level 5 because your course is 5, and if you look under spec there level 5, and if you look under unit 5, so all learning outcome. So finance management in hospitality industry is a 20 credit unit, and unit grading structure is a pass or refer. The unit and the fundamental principle of the financial accounting and financial management. So our focus will be not just financial accounting, it will be focused on the financial management and financial. Anybody knows what is the difference between financial accounting and financial management?
Not really.
A financial accounting depends on the coming in and going out of money.
Okay.
And the management involves the upkeeping.
Okay. Yes.
Okay.
Okay. What is meant by accounting then? Any definition about accounting?
Accounting is a means of being able to collect all information together.
Okay, brilliant. Okay, so we'll go through a little bit discussion about accounting. Accounting mean is a systematically record of business transactions in the book of accounts. Is a systematically record of business transactions. Transactions mean any single events, like I bought a furniture, 500 pounds. So furniture is coming to business and cash is going out of the business. So one thing will be, you heard about debit and credit.
Yes.
We'll discuss about debit and credit. So which thing will be debit? The asset is coming towards the business, is increasing asset is a debit, and decreasing cash is a credit. So always have a one thing is a debit, other thing will be credit. We call double entry bookkeeping.
Yes.
So it is systematically record in the book of accounts. We called accounting.
Okay.
Accounting is a systematically record. Financial accounting mean the keeping the systematical record and prepare our financial statements. We putting profit and loss account, we have a cash flow statement, we have how many type of financial statement we prepare in accounts? Anybody ever seen financial statement?
Um, I really don't know the exact amount.
Okay. There are four type of financial statement. Our big company, those we call public limited company, it's a compulsory for them to publish those statements. Those are four type of statement. One is called profit and loss, or we also call income statement.
Mhm.
Second statement we call balance sheet, or nowadays this according to international accounting standard, the regulatory body, we also call statement of financial position.
Okay.
Third statement we call cash flow statement.
Mm.
The fourth statement we call change in equity statement or statement of equity. So these are the four statements we prepare in accounts. So how many type of statement we prepare?
4.
4.
Four. Profit and loss,
Balance sheet.
or we call income statement, balance sheet, cash flow, and shareholder, or we call equity statement. These are four statements we prepare in accounts. So every public limited company must need to prepare to show investor, to show the company where was the registered, to submit the copy in the stock exchange if the company was registered. Yes.
Okay.
Second is we have a financial management. So financial accounting is out. We are publish the information for outsider to use. But financial management is a internal. So financial accounting is external. Financial management is a internal. So financial management is mean business, business cost. How much is cost as like budget. Like how much is the cost of manufacturing cost. There
Okay.
are there are different awarding body. One is ACCA. Did we heard about ACCA?
Yeah.
ACCA is a financial accountant. If you want to become financial accountant and chartered accountant, you're supposed to do the qualification of ACCA. If you want to become the financial management or management accountant, then you're supposed to do SEMA, which is called Chartered Institute of Management Accountant. So if you're a chartered accountant, you have a SEMA qualification, you're supposed to be work inside the company to calculate the cost of the product or the projects. That's the only the big difference between. Okay, how many legal form of the business? Now how you can start? Legal form of business?
A legal. What do you mean by the legal form of the business?
It's legal ownership of the business. We can start as a sole trader. Yes. You can start a business as a sole trader, just 1% business.
Yeah.
You can
Mhm.
start as a partnership and you can start as a limited company.
Okay, yes. So true that.
Sole trader, partnership, and limited company. So three different types legal form of ownership, a legal form of the business we can start as a sole trader, partnership, or limited company. And under limited company there are two types. One is called private limited, one is called public limited. Private limited can't issue share to the public, but the public limited they can issue like Unilever, Procter and Gamble, and various other company. Those are private limited. Hilton Hotel. Yes, all these are limited companies. But few small hotel can be has a partnership. They have a partnership between few partners. They open the hotel, and that's called under the partnership. Or if you have your own house, you open just rest house is an example of the sole trader.
Okay.
So 1% business is a sole trader. More than 1% is a partnership. A limited company is a registered company under the Company Act and have a no limit on the numbers of partners. So which we'll go through. So discuss about accounting and financial management. We'll discuss difference between the sole trader, partnership, and limited company. We'll discuss, the financial software, and we'll discuss different software. We'll discuss double entry bookkeeping, what is money, and how it help us to keep the financial record. Okay. We'll discuss VAT. What is meant by VAT? No, I think so. You know better than.
VAT.
Yeah?
Value added tax.
Yes,
Value added tax. Well done. You know as well. In your country, called GST or value added tax?
VAT.
VAT in Trinidad is called VAT,
Yes, it's called VAT.
or it's called VAT there as well.
Yeah.
Okay, good. Some country called GST, General Sale Tax. So that's
Oh,
why
yeah.
okay. Then we'll discuss about role of receipt, cash payments, and the bank reconciliation. We'll discuss role. How much cash receipt, how much cash payment, and bank reconciliation is mean checking the balance in our and the cash. Explain and how trial balance is constructed, which will explain you trading profit and loss and balance sheet demonstrate, which will go through adjustment. Describe type of sources of finance where we can borrow the money, how we can raise the money, and we'll discuss about the budget goal, and we'll prepare full cash budget, which I'll give you some examples.
Okay.
Okay. Today we'll discuss about what is the difference between accounting, financial accounting, and financial management. We'll discuss asset liability and accounting equation, and we'll discuss double entry bookkeeping, and we'll discuss financial statements. Okay. Double entry mean is a debit and credit. Two sides. If is a equal, it's called double entry bookkeeping. In in army department, in army, normally not a double entry bookkeeping because they don't telling us where this came from, who give the money. A simple record how much of the good, but they're not telling us to whom we made the payment. The cash came from. Normally, double entry is a single entry. Okay. First, what is a card up to date and preparing financial record statement about the organization, in the business transaction in the money term, recording the financial information to the owner and an interested party. The process of the notifying, marrying, and communicating financial information to permit informed judgment, and we can make the decision from these transactions. Provide checking procedures and help to prevent the fraud. So use the accounting card. So summarize, present, analyze, that will help us. We summarize the financial information. That will help you when I'll quote more examples to you. And financial accounting concerned with the external reporting. Financial accounting is external reporting, and management or financial management is concerned with the internal financial transactions and discuss. This is a comparison which we'll discuss. And accounting is mean internal. Investors primary user is a financial accounting. Those are external bodies. But financial management is the internal. Managers are the business, are the employees, owners. They use the information. Purpose of information. Financial accounting information which we give, it's help investors. What is meant by creditor? Deferred creditor?
Creditors are people that are owing.
The creditor are the people to whom we owe. It's our suppliers. Those suppliers are good, but we not make the payment to them. We will pay to them in future. Other is called debtors. Debtors mean our customer. We sold things on credit. They will make us payment in future. So opposite of creditors is the debtors. Debtors mean our customer. Creditor mean our suppliers.
Okay.
So we'll make investment. They can give us and they can do the credit and all other decision. Okay, financial management are it's help managers to plan and control operation. Timeline. Financial accounting is historical. Historical mean when I bought a building, I record on that cost, which is called history, historical when I bought it.
Okay.
Thus, year by year carry on. So, management accounting is a current and future oriented.
Okay.
Financial accounting is a gap. Gap is abbreviation of Journal Acceptable Accounting Principle. We don't need to memorize, but we go through, and this help us. This is called standard in UK. We call gap. In Trinidad is most likely have a different standard. Every country have a different accounting standard. But nowadays companies are working in a different part of the world, so that's why we use IAS. IAS is called International Accounting Standard, one layout throughout the world. So that's why we just keep one standard. You don't need to be memorize everything, but it's good to know. Nature of information. Nature of financial accounting have a objective. Financial accounting need to be audit. Financial accounting need to be reliable. Financial accounting need to be consistent every year record. And we have to show the previous year record as well to compare. But management accounting, just you prepare a report monthly, show your management, and don't need to be keep forever. But financial accounting record will keep, because they have a concern. We have to pay the tax. We have to inform to the stakeholders. So all these things we need to. So it's a good to read, please, this document. Okay, I will give you a lot of, your concept. Then we have a financial accounting and cost accounting is just and financial account is practically in a book of. Who's the financial accounting? Form group of 3 or 4 and discuss the following. Who use the financial accounting? Have you ever used? Have we ever seen? Yes. Have you ever seen any company's financial statement?
Yes, in the newspapers. Our country, they put them in the newspapers
Yeah.
so that the public would be able to see all the financial activities going on.
Yes, public can see, tax authorities can see, future investor, shareholder can see if they want to invest more money.
Hmm.
Okay. To understand accounting statement, we need to understand, what sort of the things in accounts. Okay. So asset, what is meant by asset? Any example of asset?
Asset is
Um,
an
Go
house is
ahead.
an
Go
Sorry.
ahead. Go ahead.
house is an asset.
Asset is,
You said examples of assets. I said an house is an asset. If you own a house, it's an
yes,
asset.
yes, house is the asset. Any other asset?
Um, Money, money in hand, cash in bank. Those are assets.
Brilliant. Well done. That is the asset. Land, building, plant, machinery, computer, all these
Hmm.
are assets. Because asset mean anything which will use and give us economics benefit is
Hmm.
called our asset. If we have a land, we can use for the parking, we can do the for the business. Yes,
Yes.
it's give us some money, it's economics benefit, so we called asset. If we have a goodwill, if we have a good brand name, is our asset.
Hmm.
So asset normally have a two types of asset. One is called fixed asset. We also call non-current asset. Second, we call current asset. Fixed asset mean the asset which we use more than 1 year, like land, equipment, anything more than 1 year, we can use, call non-current or fixed asset. Anything which we can use normally 1 year, we call current asset, like inventory, like receivable, like prepaid, advance payment for a year, like our cash itself. Those called current assets. Okay. If
Okay.
we have an increased assets are increasing, we call debit. If asset is decreasing, asset are reducing, we call credit. Does it make sense?
Yeah.
Yes.
Okay. What is meant by liability?
Liabilities are things that we have that we own but don't bring in income.
Liability is a legal obligation. Yes, if we have a legal obligation to pay back in future,
That's
we
like a
call it
loan.
like bank loan.
Hmm.
Okay.
Like, we bought a stock but we not made the payment. Yes, is a
Hmm.
liability. We
Hmm.
we have a different type of bond we issue to the public to raise the finance, but we'll pay them in future. Is a liability. So
Okay.
if the liability will increase, we call creditor.
Okay.
If
So a
we if
liability can be wages that we pay to employees.
yes, outstanding wages is a liability,
Hmm.
but when we'll pay them, we're reducing the liability, is a decreased liability, is no outstanding against us, we do debit. We do liability credit. So if his liability is increasing, like you borrow £100, now you're going to borrow 200 more. So it means your
Hmm.
liability increased to 300 now. Yes.
Yes.
So when if you're making payment 200, so now you're doing debit, 200. It means you're doing opposite of credit.
Yeah.
Income, income or revenue is the same thing, or sales. Income, revenue is turnover, same words. Turnover, revenue, sales, no difference. So
Okay.
sales always we do credit.
Mhm.
If the sales decrease, we do debit. If we want to reduce the sales, we do debit. And
Okay.
expenses always we do debit. Expense, expense is a debit. When expense increase, like we paying stationery expense, we advertising expense, we
Mhm.
paying patent copyright expense, we call debit. Debit mean is expense is a debit. Asset is also debit, but asset goes in the balance sheet and expense goes the profit and loss.
Okay.
We'll try to do few question in next lesson. Okay, that will help you to clear the concept. Okay,
Yep.
when the expenses decrease, when your expenses paid off, you doing credit then.
Okay.
Equity means share capital. When we issue more share to the public, okay, when we'll issue the share, what we're getting? If you have a company, we issue more shares. So what we are getting? Hello?
Um,
We
creditors.
need more money. We issue more shares to the public.
Uh-huh. We
So
get more
we
investment
getting
in.
cash more. Yes.
Yes.
Cash will be debit as I said,
Mhm.
and we shares to the public will be credit. So if I'm getting £100 cash, it means supposed to £100 my capital. Yes. So
Okay.
debit and credit is equal. Yes, it makes sense.
Yes.
There's always rule double entry. Debit and credit should be equal.
Yeah.
Okay. Next, to play the game, if you have any Android phone or online, there is a game. It's called double entry downpour. You can download on your mobile and you can play, or you can play online.
Okay.
To enhance the understanding about double entry, we
Mhm.
don't need to be as a qualified accountant by this doing just but we want to know the rules behind. Yes,
Yes.
double entry downpour. So please try to download the game. That will help you. Okay, big company, those are multinational company, those are operation in many countries. They prepare accounts according to IAS 1, is called International Accounting Standard 1.
Okay.
Okay. So we profit and loss account, first statement, profit and loss account. So in your syllabus really we need to discuss about two statements, profit and loss and balance sheet. So profit and loss, also called income statement, and according to International Accounting Standard we call statement of comprehensive income. So first thing in a profit and loss, we always put sales revenue. How much is the sales revenue? Sales mean how much worth of the sales you made. Yes, or we called revenue, we call turnover. These three words used interchangeably. Okay.
Okay.
Cost, we then will minus or will take out the cost of sales. Cost of sales means the sale which I made, how much cost me. Yes? Does it make sense?
Yes, so that's the same thing that I used to put as cost of goods sold.
Yes, we also call cost of goods sold.
Right.
Okay, there is a formula: opening inventory plus purchases plus carried inward less purchases less closing return. We can find the figure is called cost of sale. We don't need to be really learn. We just need to be sales minus cost of sales. We'll get the gross profit.
Okay.
So then we have other expenses. We call overhead expenses. Overhead mean those not directly involved in a production are producing. Sorry, my little one's making noise today behind.
Mm-hmm.
So expenses, rent, wages, salaries, insurance is also called overhead expenses. And overhead expenses, those not directly involved. Like if we are cooking food, we have a labor, chef, we have a material which we use, and we if we'll add them all, opening stock and how much we bought during the year, and we can find easily the cost of the food which we cooked, yes, and we sold. And we have a rent, we paying for the building. We have a wages, pay the chef staff. We have a security guard. We have various other people, admin staff. They're paying building insurance, so we'll take out. These are called overhead expenses.
Okay.
Then we can get profit from operation. Sometimes our major business is a hotel business, but sometimes we have a spare cash, and that cash we have invested in other company, and we are receiving some other income as a investment. So we call other income. We can be interest received on investment. Sometime if we need to make a payment to somebody, we saying, come on, give us more discount because we will pay you cash. Discount
Mhm.
received is our income as well. If we have a
Mhm.
spare building, we bought it £100,000 and we are selling £150,000. That £50,000 is is a other income as well, because it's not our business. Our mess is a hotel business, but we have a spare properties. We sold it and we are profit it. We call it the income.
Okay.
This is the layout to learn. Sales always come first. If we have anything sale return, we'll take out. Then we have a cost of sales, which we can calculate our cost of goods sold. Opening inventory plus purchases, less purchases return, less plus carried inward, less closing inventory, and the cost of goods sold. When we'll minus from the net sale minus cost of goods sold, we'll get the gross profit. What we'll get? Gross profit. So
Okay.
then come any other income, we can add it, and we can minus all the other overhead expenses, total expenses. Then we'll get the net profit for the year.
Okay.
Can't be a profit, sometime could be a loss as well.
Yeah.
This is one of the example. We have opening stock of raw material like veg and things. We have a £12,000. During the year, we purchase more stuff. Raw material £30,000 is become £42,000. Then we have a closing inventory and still in stock £1,500. It's mean we have used £27,000 worth of things. Yes.
Mhm.
So 50,000 minus 27,000, gross profit is 23,000. Then we'll
Okay.
take out all overhead expenses out of it, and our net profit is 8,700. Yes,
Yes.
this is also called income statement or profit and loss.
Okay.
Next, we looking sheet. Which statement? Balance sheet. Name is also called financial position. So don't mix up is the same thing, but sometime in account we're using two different names. Because the reason, international accounting standard and different standards in different countries, they use slightly different words.
Yeah.
So non-current asset also called fixed asset, machinery, furniture, plant. Current current assets are cash, prepaid, debtors, and inventory. Our liabilities, current liabilities are accruals, creditors. Then we have a capital. Drawing mean any money you use for personal use. Then we have a non-current liability. Anything which we need to pay more than in a year time, that's what we call non-current liability. Which we need to pay within a year, and non-current we need to pay more than a year's time. Bank loan, debentures, bonds are all called. Okay. In as accounting student, we need to remember the accounting equation.
Okay.
Accounting equation is called assets equal liability plus capital, or we call asset minus liabilities net asset equal to capital. What is
Okay.
accounting? What is accounting equation?
Assets minus liabilities
What's the
equal
capital?
capital.
First is assets equal to liabilities
Plus capital.
plus
Capital.
capital. So assets minus liabilities equal to net assets, and net asset equal to capital. It's the same thing in the maths, just an equation, yes?
Yeah.
Does it make same thing? Asset minus liabilities become net asset.
Okay.
I don't know, it will look, my question.
No questions.
Okay. And I spoke to a bit. Now we'll do this and we'll try to be to hope. Definitely. Okay. Just set up this account. Let's one a understanding of Yes, just click the right. Okay, I mean, okay, is a key is coming. Okay. So today we learn how many statements we prepare,
4 statements.
Statements.
or what those are.
What did you
Profit
say?
and loss, balance sheet, cash flow, equity statements.
Yes, well done. Okay, is it try to find hotel you like? Any hotel you like? Big hotels.
What did you say?
Which hotel you like? You like
Marriott.
Hilton, Marriott?
Marriott.
You like Marriott, okay? Can we try before next lesson? Just search, financial statements of Marriott. You can find, online our financial report we can call, and we'll see the profit and loss account and the balance sheet of Marriott Hotel.
Okay.
Mm-hmm.
It will help us to look around, sort of the information we have.
Okay, as the lesson goes on, do we have to actually do the statements, do an example of these statements?
Do you have? Okay, try. It is available online as well. It's in your country or world statement. It can be, because of course these are the world chain. So whole company can statement we can find online as well.
Okay.
Please try to log in now.
Eight eight 88011
Yes.
8801169.
Yes, Fatma, it is. Okay, well, that, please indicate which one of the following profit statement is calculated the profit of the year.
Indicate which of the following calculates profit for the year. Sales account. 2 column trial balance. Statement of financial position.
Statement shows the all Come on, 1% left. It's there. Profit and loss. Because profit or loss is a statement, profit and loss, or we call income statement shows profit and loss. Yes, and we calculate, by using this statement.
So what's the answer? Statement of profit and loss.
Yeah.
Okay. Next, indicate which one of the following best describe the current asset. For the current asset, we discuss current asset.
Receivable bank cash. Inventory receivable payable bank money non-current asset inventory.
Look, current asset, not non-current asset. Statement you think is correct?
Let's see. Cash, prepaid expenses, accounts, Parliamentary.
Current assets. Okay. So,
Inventory, receivables.
all is inventory, prepaid, cash. Those are current assets. Yes.
Okay.
Okay. Then, which statement? Prepaid statement will show what type of asset. Is statement of financial position shows all assets, all liabilities, and capital. So where we show the current asset. Prepaid is a current asset. As a prepaid is a current asset. So which statement will be correct? Prepaid is a current asset. Just we'll put the current asset. Click the option current asset. Because it's your first lesson, just we'll just recap. So not worried. Current asset mean and we can use both. Next, bank draft. Our draft. We have
The print where a bank overdraft should be shown. Non-current asset. It's a current liability. Please because you have three after.
so bank overdraft is it our asset? Is it our liability?
Liabilities.
Okay. What type of liability?
Is it current?
Okay, well done. Good, well done. Current, our draft is our current liability because we have to pay within 12 months. Our
Yes.
draft for short period of time. Okay. Mark is markup of the sale 110,000, 30% markup. So markup we always add in the cost. If you take 30% and add it in 150,000, you will find the figure of the sale revenue. In something I bought it, I want 30% on the profit. I want to find the sale value, how much was. So if you take 30% on 150, then add it and you can find the figure.
Can you say that again, Sata?
Is that cost of sales is mean when you bought something, you add 30% your top up profit, whatever you want to be earned, then you can find the total value of the sale is supposed to be 195. Awesome. Should be the okay. Okay, I think so that's a bit harder for you. Here, well done both. Well done both. Yes.
Imagine.
So today we learn about what is the cost. The markup is we called whatever the cost we have, we can top up whatever markup we want to earn on it.
Okay.
So sometimes you buy things 10 pounds, you always say I will earn 30% profit on it. So you take 30%, you can find how much you will supposed to sell to earn 30% profit.
Okay.
Okay, well done both. It's good attempt. Treatment by asset and economic benefit. Anything which we can use asset, current asset, anything we use for 12 months we call current asset. Anything which we need to pay within 12 months we call current liability. Anything we need to pay more than 1 year we call non-current liability. And the capital, it means the share capital or our investment in the business we call capital. All assets, liabilities and capital shows in the statement of financial position we also call balance sheet, and profit and loss and expenses shows in statement of profit and loss. Okay, that's we really learned today. So please, I'll send you this, try to read a bit and in the next lesson we'll go through remaining. We'll go through partnership, sole trader and companies. Then we'll go through further double entry bookkeeping issues, and we'll go through the trial balance.
Okay.
Any question?
No questions.
Sorry, it's a bit too
Sata,
much, huh?
send me the slides, please, for last week so I can read it off. So I can start
I'm going to send you all, the previous lesson of your marketing unit.
Okay.
Plus, I'll send you today and the last lessons as well, and I'll try to arrange 2 lessons with you, Fatma, separate.
Okay. Thank you.
And today we learn all these, well done you both, really, well participated in quiz. So I'll see you next week, next lesson, and have a nice time. Have a nice weekend.
Same here.
Thank you.
Have
And
a nice
please,
weekend and take care of your
okay,
cold.